So, so Eddie, what do you think after the Fed finally moved, historic day? The million-dollar question in my mind is, was that break in the dollar, rally in the euro from the ECB a week ago? Which one is going to maintain control in this market? Has the dollar peaked and this is just going to be a failing rally in the dollar? Or are you looking for a continuation of the dollar bull market from recent highs in the euro, recent lows in the dollar?
No, I think you're going to still see continuation in the dollar movement stronger. What we've had is 2 days ago we had a key reversal down in the euro against the dollar. It literally just peaked up, went up to the medium moving average, slammed
Right.
into it, and then just went straight back down again.
Okay. So is that, would you say if we penetrated that high that there still could be a bit more short covering in the euro and a little bit more long liquidation in the dollar? It's still pretty crowded trade, even though
No,
we
no. I
pushed
think I
out a
think if
lot
you're
of
going to have
bears.
done something, you'd have done it by now. I mean, you're coming into the end of
Okay.
the year. If
Right.
you're still long of the euro, why the hell are you at this time? Why are you still long of it when interest rates have gone up, basically doubled from 0.25 to 0.5? You're coming into the year end, quarter end, financial year end. Why would you actually still be long of the euro ahead of this move where it's people already got their positions on board, and it comes down to whether it's adding it. Where's an opportunity you can add things to it?
Okay. Why do anything until year end?
There's always a chance of a Santa Claus rally. It could be in the
Uh,
dollar. It could be that we'll see a movement. If I can share a chart with you, would that be okay?
yeah, I'm so glad you know how to do it. You have you know where to go, that green box with the white
I
arrow.
will. Yes, I do. Bear me just 1 second. I will do that right now. And there we go. Can you see it?
Not yet. Then you have to click share or
There we
start.
go. And there we go.
Got it. Okay, great. So now a picture speaks 1,000 words. Um, nice looking chart. To me, it, that one day you're thinking is going to be completely negated. If someone put a gun in my head, I'd be a buyer at 107.50.
I would say yes, but you're looking from a huge short position from the 110.50 area. You've got downtrend lines, you've got moving average lines all above the market, which are pushing down on this.
Mm-hmm.
Um, I think you've got to be looking for it to try back down again to, the 107.50. But that's not the whole story. It could be this is a halfway hesitation and seeing the thing go back down again further and possibly testing down to that 105.50 area. Okay, to September 2003 low, that's holding the market up just underneath that 107.50 area, or 107 and a bit, 795 area.
Yeah, if we're going to get to 105 and a half again, then I think the parity bears have a shot, don't you? I mean, I'd say there's a ton of stops under the ECB low and the March low in the euro, and most likely that would trigger a lot of long liquidation. So that's my line in the sand anyway.
Yeah, I mean, I think the long liquidation of the euro, a lot of it's happened on that big move down in October. Then the
Right.
recovery, though it went above the 50% Fibonacci, which is at here at 110.17 area,
Mm-hmm.
we never had a close above it, and we had this beautiful key reversal there, beautiful, right on that moving average, right on that long moving average. That's the medium one up there, and then we are 2 days down, and that's where we've got to be looking at, just sub 108. And the next area is this small area here, but it's just
Okay.
sub 108. That's the 50%. That's also the high back when before we actually formed this pattern. That was the low just there. So I think you've got to be looking there, and then nothing till about there. Not till about the 105.50 area. I don't see any reason, because in 3 months' time, if I can now go back to myself rather than the charts. Bear me just 1 second.
You're back on camera, Eddie.
Right. If I can go back onto, if we go back onto, in 3 months' time, we're going to have a potential another rate hike in the US, and then 3 months after that, and then 3 months after that. It's a consistent thing, and I hate this use of the word normal markets. Normal markets are whatever they are, whether it's in a quantitative easing phrase or not a quantitative easing phrase. So if you have a stronger dollar moving gradually, you know it's going to be like that for at least the next 12 months, maybe more. And the euro, they're just trying to find ways of actually putting more money in the system. They've extended the period. They've taken basically stuff written on the back of a cigarette packet will be taken as collateral for the euro. They've not increased the amount, but the rotation of the members of the board of the ECB could be that we'll actually have somebody who say, actually, you can take a bigger amount as QE. You're looking at that situation and you look at the chart and say, actually, why am I still holding euros? Why am I holding this? It's a store of value in times of when things are not so good, but so's the dollar, and maybe that's the better of the two opportunities.
Okay, how about something that is deviating a little bit from the dollar strength that we've had, which is unusual? The Aussie. The Aussie hasn't made new lows for several months. Are you seeing anything? The markets are very focused on the commodity sector, and
Yeah,
the
I'm
whole
seeing.
world is bearish.
Yeah, I'm seeing in that one an ascending triangle pattern. I'm seeing something basically. It's the wrong place for it. It's bouncing along the bottom. An ascending triangle should be okay. Here's the
Bullish.
market, and then yeah, but there's a pattern forming. Higher lows, stationary to. It's not really quite much higher, but stationary highs, but higher lows
Right.
each time. And you know yourself,
Right.
higher lows, stationary highs. Yeah, that's a chart
Ascending
for it.
triangle bullish.
Yeah, I would say at the moment it's looking that way,
Okay.
but. You look at the market, and as John Maynard Keynes says, if it rains, I put on a raincoat. What do? If it is basically a wedge pattern and it's literally a halfway hesitation for another move lower, well, then let it be so. Let's see that market move down. But let's do something. At the moment, we're moving through that triangle. We're not quite 2/3, so the chances of false break are still there.
Strongly neutral until it price action gives you a
Trade the
breakout of the
range
full
within that
movement.
triangle. You've got a great triangle. You can do options. You can do lots of other things. You've got a great triangle. Gets to the top, sell it with stops above it. Gets to the bottom, buy it with stops, sell stops underneath it. That would be an ideal situation to do in something like that.
Can I assume that with your view on the dollar that you're looking for much higher levels in U.S. dollar yen? The U.S. dollar yen hasn't made new highs for 6 months, again with dollar strength, not confirming with dollar strength.
I have an unusual view of the dollar yen. My view is it's the most heavily regulated and influenced market of all the free market traded currencies. You have the central bank and the Ministry of Finance in various ways working through their buddies at Campo and the other pension fund, the Campo is a post office pension fund, and there's the other one which is a public employees pension fund, who buy and sell the currency on behalf, not officially, of the government and the central bank. The situation there is,
Central planning is not a surprise to me.
well, yeah, but it's I mean, the yen is basically sideways. It's the third state of markets. It's not bullish, it's not bearish, it's neutral. And it's
Okay.
actively neutral, much like their economy. It's going nowhere very fast at the moment.
Okay. Let me ask you, maybe switch gears a little bit, Eddie. Are there any geo events that you think could shake the markets in 2016? I'm a little concerned about saber rattling between the U.S. and China around the South China Sea island, sending cruisers there, sending spy planes over there. Recent deal to Taiwan of 1.8 billion in arms, not making China real happy.
Yeah.
They want to be the king.
Yeah, they
Does
put sanctions on some of the defense companies there.
Martin Armstrong, I've interviewed a few times. I don't know if you're familiar with him, but he's kind of a forecasting legend. Thinks that the war cycles are picking up. Are there any things out there that you take into consideration? I know it would be a huge black swan event, but anything that keeps you up at night as far as what might happen in 2016 to surprise the markets?
Yeah. Well, my compliance director would like you to know these are my personal views, not the view of ADM or AC Top or any other part of the ADM group. But there is something, and it came about with the situation in Paris.
Yes.
In the South China Sea, in the Taiwan Straits, you're dealing with sensible people who have an agenda and can communicate with each other.
Okay.
When you have events such as what happened in Paris, New York, London, and various other cities, Barcelona, which have happened because of terrorist events, and then those terrorist events impact the market, the reason they impact is because those people don't care about a sensible dialogue or duologue in that sense. They're going to be just out there, and they effectively, in some ways, could be running monetary policy. If we had a situation where all of a sudden there was a terrorist attack which got through, and you know as well as I do, so many have been stopped. If that got through, the Fed, Bank of England, the ECB, BOJ, others would be flooding the market with short-term financing, so there'd be plenty of liquidity because of the movements in the stock markets, short-term interest rates, etc. So it comes down to who is actually running short-term policy. Is it a knee-jerk reaction to events such as that, or is it actually the central bankers? And I think that's the situation that we have to worry about. And that's the real thing. If you're asking me one specific thing, it's some sort of event.
Because the effect of that and just the fear of people not going out and doing their daily routine, and that means for the consumer to spend and go to malls and
Yeah, go and see the movies this weekend with The Force Awakens. I mean, what could have been there? Something you never know what would have been there in some sort of thing like that. It's the whole situation around that. Other situations, South China Sea, Taiwan Straits, even the stuff that's to a certain degree going on in the Middle East.
Yes.
With they're confined, they're local to their area, and they're between people who can actually have a dialogue. If you have something in Western Europe, North America, other parts of the world where it impacts the market, and you just have no idea that's a real black swan event. The rest, grey at best.
What a great interview, Eddie. Last time I talked to you was about Essex University and that you're teaching courses there, and we didn't really have a chance to talk about markets, and very thoughtful interview today. I appreciate it. How's it going at Essex? Are you enjoying teaching people and mentoring people there?
It's a good thing to do. It is a good thing so that I can pass on some of the knowledge I've accumulated over this time, and it's not just wasted when I decide to quit this business or go and do something more interesting instead. It's actually going to be something that can be passed on and people use to develop their own careers. And they can then take that and say, actually, this is what I've learned. I've been on this course, and it's an accreditation as well.
Okay, so planting good seed and we reap what we sow. Eddie Tofpik, thank you so much for being with us. I wish you a great holiday, safe holiday, and may pips rain down on you and your students in 2016 by Trading Warrior Brother.
That's very, very kind of you. Thank you very much, Eddie. And the same to you and all your family as well.
Thank you, Eddie.
Thanks.
Good hunting, buddy.
Cheers.
King Dollar lives. King Dollar by Eddie. As Larry Kudlow would say, King Dollar, King Dollar. Not to be dethroned anytime soon. That's the view of Eddie. Thank you, my friend.
Thank you.
Everyone thank Eddie for his time today and sharing his views post-Fed. Our community thanks you, Eddie.
It's very kind. Thank you very much.